Welcome back to the weekly stock portfolio update videos. Currently, my two stock portfolios sit at a value of over 125,000 AUD. That's made up of the just under 70,000 AUD in my stake portfolio, and then the 55,594 in my Vanguard portfolio. You would have been able to see if you've seen any of my older videos that my balance is staying quite stable at the moment, as I haven't really been investing and I've been saving money towards a house deposit. Overall, my US portfolio has actually gone down in value in terms of AUD because of the Australian dollar strengthening against the USD. If we have a quick look at the calculator, you can see just in the last few days, 5 days, the value of the Australian dollar has gone up a little bit, hence why my US portfolio's value has gone down a little bit because it's all in USD. But overall, for my two stock portfolios, again, not much has changed. So sitting at around 25, nearly 26 grand, 126 grand. So it's overall been pretty stable. If you look at any of my holdings, it's all stayed the same. Many of them have done quite well recently. The S&P is actually on a decent little streak. If we have a look in the last week, it is up just under 1%, so not the worst. And in the last month, it's had a pretty good month as well. Last 6 months, 15%, and last year, around 13%. So yeah, not complaining overall. Good results for the year, especially as we head into December to wrap it up. My other position is VGS. This is just the international shares tracking ETF that tracks around 1,300 companies globally, excluding Australia. And it just gives me good diversification into some of the biggest and best companies in the world. So today I also wanted to speak about Netflix, so I'll go through them a little bit later. Netflix is down today. There is news that Netflix will be buying Warner Bros. Film and streaming assets for $72 billion, so a very pricey deal. But it will be interesting, so we'll go look into that a little bit. I'll just finish up my general portfolio update. So as you can see, the Vanguard International Shares ETF that I hold is up around 16% in the last year, give or take. I think maybe a bit less than that. I think that gets updated a bit slower. But overall, it's not been a bad year for many investors with this. This is my biggest position by far. It's around $55,000, as I said. My next biggest is VOO, which is around 20,000, nearly 21,000 USD. So that's quite respectable as well, but I haven't really been investing in that as much recently. Then you go through next and you have the likes of Google. Google's now sitting at just under 11 grand USD, just because of how strong of a year it's had. You can see it's up 86% in the last year. And in the last 6 months alone, it's up 90%. So I'm up around 95% in my investment. So it's been an amazing investment for me this year, and it's really boosted my portfolio's returns. I'm up around 5,300 USD on that position. So for an individual stock, I did lots of videos on this position earlier in the year. In the middle of the year, as I kind of saw it as a high conviction play. There was lots of news around the antitrust fears, things like that, and I just kind of thought that kind of seemed a bit short term, and I didn't see it as affecting Google long term. And then they've been able to really step it up on the AI front with their models doing really well. It's just been a really good year for Google investors. Next is Amazon. Amazon hasn't had quite as strong year as Google. You can see it's only up 4% in the last year, up around 10% in the last 6 months. I really started building my position around 6 months ago, so I'm up around 16, nearly 17% on the stock, with an average buy price of $196 a share. Amazon's a bit more of a longer term play for me. I think long term, Amazon will be able to really benefit from robotics. I think they'll really be able to benefit from the use of artificial intelligence, be that in their blue collar side of the business in the warehouses and distribution, and in their white collar business with AWS, and just overall in the company. I think long term, Amazon will be a good position for me to hold in my portfolio. So I have around 7,600 USD invested. Next is Microsoft. I have around 6,500 in there. It's had a bit of a pullback. If we have a look at the last month, it's down 3.21%. And yeah, it's pulled back from highs it previously had around $540. I'm up around 53%. This was probably one of the first stocks I ever bought. And yeah, again, Microsoft, I think similar to other tech companies, I think long term, I think it's a good long term play where I love their business model. I think it's a great company to invest in, and I plan on holding it in my portfolio. So that kind of sums up the US portfolio side of things. And then we've obviously spoken around my Vanguard side of things. And if we have a quick look at my Excel spreadsheet. This kind of just shows it a bit better. You can see the breakups of how my portfolio is kind of weighted and looking, and then just them over time. So over time, you can see my stake portfolio has kind of just been up and to the right. It's been quite steady. Never really sold much out of it. And then my Vanguard account, just with that recent sale. So I sold out of VLC, which was a ETF I held. It had around $16,000 in at one point, down to 11,000, down to zero. Hence, the reason why I sold was because I mentioned earlier in the video that I am going for a house. So I needed a bit of money for a deposit. So that just kind of helped boost my deposit amount. As I go for that, I might potentially, or I will probably have to sell more shares going forward. I'll decide where I want to sell them from. I have actually sold around $3,000 worth of shares in my US portfolio that's sitting there in cash. I just haven't converted it back to AUD as there is fees and things. So if I have to sell more, I'd rather just do it all at once. But you can see with my investing over the years since 2022, when I've been tracking this December to now, it's kind of just been a steady trajectory up. A lot of that's been deposits, but also more and more of that is becoming gains as the portfolios get bigger and bigger. So that's been really good for me. Overall, with my dividends as well, that's kind of been a similar story, kind of a snowball effect. As my dividends get bigger and bigger, as I have sold out of some of my individual positions in my stake portfolio that were paying quite good dividends, like JP Morgan as an example, McDonald's, my dividends have gotten less, but again, I'm not a dividend investor, so I really don't mind. And all my dividends I get are reinvested back into the portfolio. Same with my Vanguard account. VLC paid a very strong dividend yield, but I have sold out of that, so my dividends will naturally come down as the balances come down. And in the last year, I earned around roughly, for this year, I'll probably just hit under $2,000 in dividends. And you can see in total dividends, I have around nearly $3,000 in Vanguard and around $800 in stake. Keep in mind that's USD, so a bit more when I convert it back to AUD. But yeah, like I said, all this money is going straight back into the portfolio so I can kind of keep building this over time. I did also want to talk about Netflix. So I did briefly mention Netflix is buying Warner Bros. Film and streaming assets for $72 billion. Netflix announced on Friday it's reached a deal to buy pieces of Warner Bros. Discovery, bringing a swift end to the dramatic bidding process that saw Paramount, Skydance, and Comcast all vying for the legacy assets. This is an interesting company, Netflix. One of my favorite YouTubers on here who does personal finance and investing videos, Joseph Carlson, talks about this often. It was an investment that he held for some years and he's done quite well on it. In the last year, Netflix is up around 9%, but if you look in the last 5 years, it's up around 100%. And yeah, it was one of the positions he's done quite well on, and it was a position that I looked at. I never actually invested in Netflix, to be transparent. I always thought it was maybe a bit expensive, but again, maybe you're buying the quality. And I think, yeah, he made a really good story for it, and I'm happy he's done quite well because he went through downtimes with it. So hopefully he's reaping the rewards at the moment, and we'll see what this deal means long term. So Netflix announced the transaction comprised of cash and stock valued at around $27 per share. The company says that puts an equity value of the deal at $72 billion, with a total enterprise value of approximately $82.7 billion. So this will kind of just keep building on Netflix's strong base of all films and TV shows, movies, everything like that. When you're looking for something, they do kind of have majority of the content people are looking for on Netflix. They've got a very deep content. So blockbuster deal brings together the streaming giant Netflix, which has upended the media industry in recent years, and the storied Warner Bros. Film studio, known for its library including The Wizard of Oz, Harry Potter franchise, and DC Comic Universe. So lots of those kind of staple names that many people and households will know. It will also include the contents of HBO Max, including Sopranos and Game of Thrones. So again, these are real staples that I think people will watch for years going to the future. So Netflix obviously understands that. I know that some of you are surprised that we're making this acquisition, and I certainly understand why. Over the years, we've been known to be builders, not buyers. Netflix co-CEO Ted Sarandos said in an investor call on Friday morning, "We already have incredible shows and movies and a great business model, and it's working for talent, it's working for consumers, and it's working for shareholders. This is a rare opportunity," he said. So as you can see, he's just kind of justifying it to investors, but I am someone who does have a Netflix subscription, and they do a lot of those Netflix originals at the moment, and they've been doing that for years to kind of build their own base. But yeah, I think it will be interesting to see what happens with this. I think a lot of the other streaming services will probably find it hard to compete with Netflix. The only other one that probably has the money to do similar things is like Amazon, just because of the overall business Amazon has outside of its streaming services. So it has a lot more access to capital than what maybe some of its other competitors do. But it'll be an interesting one to watch going forward, as Netflix is a stock that I have had on my watch list for years. And yeah, hopefully it does well for investors. But again, overall, that's just kind of a quick video today just to show how the portfolios are doing. I plan on doing weekly portfolio updates, monthly net worth updates, and then just individual content as well. So you might have seen on my channel, I've done a few videos on MBA recently, on my master's. I did a video on student loans. I'm just trying to get a few more personal videos out there. I'm also uploading more shorts again. So there was a period I was very consistent with my uploading. It got very busy for me with work, travel, studies. So I'm trying to get back on top of it and just kind of keep promoting and boosting my channel again. So thanks to anyone who's watching, and feel free to share your thoughts in the comments.